Why didn't mortgage rates really drop down? Because you're probably thinking, okay, Dan, you keep telling us every day, watch oil. And as it comes down, you're going to see rates come down as well. Well, yesterday we had a huge drop in oil, but mortgage rates didn't really move that much. I'm expecting them to go back down to 5.99. So let me give you my thoughts on this, and then you determine after the video, is it time to lock now, or should you wait a little bit longer for lower rates? So let's get to today's news so we can understand this. And the first thing I like to do if you're new to my channel is I like to start with the chart. So all you have to understand is that number right up through there. If it's green, that's good. It means mortgage rates are getting better. If it's over 10, that means actually mortgage rates are going to get extremely better. So right now we're up 16 ticks. If you look at a 2-day chart, that's what we're seeing right through here. Market was way up. Okay, this was yesterday. And remember, when this goes up, mortgage rates get better. Then all of a sudden it started coming down. And this was kind of a head scratcher because I'm like, okay, the oil prices are tumbling, the markets are rallying. Why isn't mortgage rates getting better? Well, today oil's dropping below $80 a barrel and we're seeing a rally once again. So is the rally going to hold? Well, at the end of this video, we'll come back to this. But right now we're up 15 ticks on the morning. So let's get over to today's news. The reason why I keep saying mortgage rates are going to get back to 5.99 is this chart right through here. Okay, so what this chart is the correlation between oil and the 10-year Treasury. Okay, the markets, it's really hard to find data on the MBS market. The chart we just looked at, so what most people do is they look at the 10-year Treasury. So let's look at the correlation between this, and then you let me know what you think is going to happen with mortgage rates. So right before the conflict, here's the numbers that we saw over through here. We had oil prices down below $60 a barrel, and mortgage rates were right up through here. This is the price of a bond. Okay, so what we're seeing right through here is as oil skyrocketed up to almost $120 a barrel, what happened to the 10-year Treasury? Well, it followed suit. It rallied and rallied and rallied. Okay, so then oil dropped a little bit. The 10-year Treasury dropped along with it. Look at the correlation between this. Again, it's oil and the 10-year Treasury. And so I'm like, throw out everything else right now. This is what's moving the markets. Well, here's where we are right now. If I take my head out of the equation for a second, you're seeing this chart over through here. Now, here's where we are on the rates. And here's where oil is. It is now below $80 a barrel. So what you're seeing right here is this number down through here should start dramatically moving in line with this. Well, if you see the 10-year Treasury dropping down through here in yield, that means mortgage rates are going to drop as well. So that's the correlation, just think, between oil and mortgage rates or interest rates in general. So once oil continues its descent, well, most likely we're going to see mortgage rates continue that descent as well.